Okay, today's video is a trading lesson in HLF. Decided to do a video as opposed to write it. Just thought that would be easy. So it's a day after Christmas. Things were very slow in the market today. And in fact, I believe HLF was the only fresh in-play name that we talked about in the morning meeting. The rest were all second day and technical plays. And so this was my focus on the open. We know that it's been in play for 5 days. Since back on the 19th, when Ackman, a large hedge fund guy, did a multi-hour presentation as to why he has a long-term short position on it, and that got it in play for short-term traders. It came down to the mid-30s that day, and then actually broke down quite nicely on Friday, trending down from 34 all the way down to about $26 a share. There was a little bit of a sign that there might be putting in some bottoming action on Monday, and then in the pre-market this morning it was being bought and was being pushed up from, actually let's see if we can zoom in on the pre-market action for you. So here's today's pre-market, and when we were doing our morning meeting it had already pushed up from 25.5 to 27 and was consolidating above 26.50. So the way we were looking at this in the pre-market was we were looking at to trade it on the long side as long as it was holding above 26.50, and confirmation for us would be a hold above 27, looking for a bigger move to the upside. And if it failed to hold above 26.50 once the market opened and started moving lower, then maybe we would look for a move back down to the pre-market support around 25.40, and then the weekly support around $24 a share, where we almost touched that on Monday. So there were two lessons I tweeted on StockTwits that I wanted to share. And the two things that we can take from today's intraday action is, number one, if you're going to show up from work on a day like today, and I would say about 85% of SMB's desk wasn't here, if you are going to show up and sit in your seat and actually do your job and pay attention and be patient and make the most out of the stocks that are in play. And by the way, it wasn't just HLF. RIM played out pretty nicely as well. There was a pretty nice squeeze on that, trended all the way up to $12 a share. And even NFLX, which we talked about in the morning meeting, if it could get above 90.50 and hold above there, they might squeeze it to 93. That actually happened in the middle of the day while I was off the desk. So some of the things that we talked about actually played out kind of nicely. But if you're going to show up, it requires being patient and being present. And when I tweeted that, the idea of being present, I know some people were probably thinking I was talking about being present as in the moment from a meditation standpoint, making sure that you're focused on that moment, and so that you are taking advantage of what's going on right now in the market. But it was also a bit of a double entendre, because one of the traders on the desk who was actually trading HLF, he got up from the desk, and this is kind of unbelievable to me. Right here, it was almost 10:30, and he basically had left the desk. And at that point, the stock had already held above 26.50, and we were trading it on the long side. I was long from 26.72, had moved higher to 27.80, and had just pulled back, and it was showing some support in this 27.30 area. And I had gone through here, stopped me at a sum here, but was holding here, and I was waiting for this kind of the next leg up to see if it would go through 28, maybe go up to $29, $30 a share. But he decided at this point just to get up from his seat and go take a break, and so he wasn't here when it made this next move. It turned out to not be a lot. It ended up going up about 70 or 80, I guess it's almost $1. It went up from, this is where I was buying, where was it? I was buying in right here. I bought it in around 27.31, adding to the position. It went up about 80, 90 cents here, but he took a break at this point. You can see the volume came in. This move turned out to be an okay move. Not a great move, only went up less than a point, but this could have turned into a multi-point move, and I could have heard the complaining, oh, I can't believe I went up for a smoke or to take a break. So I don't get that. I'm kind of old school like that. If you're going to show up to the office, actually sit in your seat, make the trades that present themselves, and be patient, and at least hang on to the desk for at least a couple of hours to see how that's going to play out. So anyway, this plays out, and I caught this move. And then, so that was lesson number one, be present. The next one is just a simple tape reading lesson, which basically was this, and I'll show you how it kind of played out right here. So I noticed after it made this move up here to 28.15, it came back down a couple of times, and it spiked down and couldn't go below 27.40. So I was mindful of that fact, and I was in fact moved my stops higher. My stops had been down at below 27 and below 27.25, so I actually at that point moved one of my stops up to below 27.40, and I happened to be on the desk when this move happened right here to 27.40, and what I saw on the tape was a buyer, so I basically tripled up my position. And this is one of the techniques people ask a lot of times, like how to use the tape, and there's a bunch of different ways to use it. Actually, G-Man created a reading the tape program to help people understand the different types of ways that we use that skill. And one of the ways that I like to use it is when I'm in a position and I know I have a core long position, if it pulls back to a level that's fairly close to an area where I know I'm going to hit out of my long, I'll add into that position because I want to put on more risk much closer to my stop, because the risk reward is much more favorable at that price. So as soon as I noticed on the tape, and we can zoom in on it, you can see there was a buyer. Someone bought about 20,000 shares here. I tripled up. I paid 41 cents to triple my position, and I just put a stop for those extra shares right below 40. Now it turned out it didn't work. I got stopped out right here for a 5-cent loss on those extra shares, but if I hadn't been stopped out there, it ended up trading up about a point. And so, you can do the math on that. 5 cents of risk for me here for those extra shares. And by the way, it did come down and touch that 40 cents again. I happened to step up and was off the desk again, so I didn't buy it back there. But if reading the tape, if those types of plays work for you even 30% of the time, you can crunch the numbers on it. It's a huge addition to your profits because it was a 5 cents of risk, and ultimately touched that again, went up a point. So if I'm risking 5 cents and I can catch an extra 50 cents to $1 on some extra shares, the risk reward it even works out if it only works 10% of the time. But I'm pretty confident those types of plays work more than 30%. And so that's just one of the ways that I use tape reading skills, is to find a low risk spot at a position that I really like, where I can risk quite a little bit, and then trade it back up. And then the way you come up with the targets is you just go the morning high, 28.14, 75 cents away, risk of 5 cents. It's a 15 to 1 or 1 to 15. That's a trade that I'll do every single time. And so those are the 2 lessons. Hopefully you got something out of that, and we'll talk to you next time.